Hello and welcome to this case study video on Tesla. We're going to take a look through introduction to Tesla today, look at their product range, how they're expanding across the world with their gigafactories, the importance of vertical integration for them, and then what's happening for them in the future in terms of their competition, but also what's their response and how they're going to change their business in future. So Tesla itself, founded in 2003. Elon Musk was not in the business at that point, so he sort of joined as lead investor in Feb 2004, becoming CEO in October 2008, and is clearly now the face of Tesla when we think about them as a company. You can also see here they're becoming a public limited company in 2010, raising $226 million on equity markets, and their current market cap is around 1.29 trillion. That's just calculated by adding up all the shares that Tesla has and how much it would valued, basically how much it would cost to buy them on the stock exchange. You bought all their shares. So 1.29 trillion there, quite a big valuation. So Tesla themselves, they have probably got some monopoly power. I'm going to see some of the market share figures later on, but they're in the market for high performance electric vehicles. They've got premium, but also trying to get into the mass market segments. And what gives them that monopoly power and what makes them different is their brand. It's a world recognised brand. They'd also put forward the better technology, the EV technology they've been using, the infrastructure they've put in place to make sure charging is available, but also just updating continuously their software, using the over-the-air software updates. So those sort of things give barriers to entry. It makes it harder for firms to compete with them. They're differentiating their products, and therefore, along with their market share, allowing them to be a profit maximising monopoly, and therefore pricing at P and Q, where marginal cost equals marginal revenue. So this is some background on electric vehicles, so you're probably aware of most of this. So using the sort of battery to power an electric motor is the key thing about how electric vehicle works. Obviously some of them are hybrid, some are just pure electric vehicles. One of the main things and why governments are promoting these is due to the no exhaust emissions when you compare to those petrol and diesel cars. But whether people are switching to them across the world does depend a little bit on, well, can you charge them? So we're going to look at some policies towards that in the UK in a minute. Range anxiety, so what range can you do without having to charge up? And can you do long distances? And also the higher upfront cost here with the electric vehicles. This is why some of these are obviously subsidised or grants were given to start with to try and encourage people to take that upfront cost for the environmental benefits. Now, one of the things that's important, obviously, to create these electric vehicles and the batteries is all these different metals and raw materials that are required: lithium, cobalt, nickel, graphite. And as you'll know, like those sort of products will always fluctuate quite substantially. So the chart is showing you the lithium roller coaster, so the change in lithium prices in recent years, that big spike in 2002, 2003, or coming back down again in recent times. Now that spike was caused by a big upsurge in demand for electric vehicles, and the supply couldn't keep up with that. But then once production sort of caught up with this, then supply increased and responded as you'd expect in the market, and the prices sort of dropped down again. But as an electric vehicle or a battery manufacturer, there is supply chain risks here. You're highly specialised in that business, in that product, and therefore you're independent. You're reliant on the supply chain to make sure you can make these batteries and the production. So things like the pandemic obviously shut down production massively. So there's massive overcapacity at some of the gigafactories for Tesla at that juncture. What was the political stability in some of the countries that are providing these materials, and also takes a long time to get transport these materials to the different production facilities. So that sort of supply chain reliability, fluctuating prices means it's not plain sailing in terms of production all the time. And so thinking back a little bit to what we said about the lower exhaust emissions, well, there is also that potential external cost in producing electric vehicles. And therefore you can see on the right, this is the classic production externalities, negative externalities diagram for your welfare loss of ABC, your free market optimum there, a QFM, overproduction, if you just took into account those external costs we're going to talk about now. So one side of this is the mining itself, so mine those metals, therefore could be habitat damage, water depletion in those places, but also the energy usage itself in producing these batteries could often be powered by fossil fuels and therefore cause carbon emissions themselves. So there is a balance here in terms of it's not all going to be reducing environmental damage. Obviously, production of this and the mining and the battery production can offset that in some ways. So it's just to say that it's not fully exhaust or it's carbon emission free. It'll also depend a little bit on the charging network that you have for electric vehicles and whether that is fossil fuel orientated or using renewable sources. Because if you're charging all the time and use electricity and that's fossil fuels again, that'll be an issue. Although obviously they're going to try and use renewable energy in those electricity grids to power them as much as they can. And so, countries across the world are promoting electric vehicles. So one example here is from the UK. So the 2035 ban on new petrol and diesel car sales. So obviously there'll be cars in the market at that point, but you can't get to buy a new petrol and diesel car. So that would mean that people have incentive to purchase, or they have to purchase, electric vehicles or go to the second-hand market, as well as the fact that they're trying to make sure there's more charging facilities. So the first bit there about regulation, we've put in the fact that charge point installation in new homes has become mandatory. So therefore there'll be more ability for people to charge at their home or non-residential buildings, but also a big investment by the government in terms of the charging network, public charging network, to put 1.6 billion into that. On the other side, there was also in the recent budget announced of a per mile tax on electric vehicles. This is mainly put in place to try and get back some of the revenue you're going to lose when petrol and diesel cars go off the market, and there's not that sale of petrol and diesel, which is a big source of tax revenue for the government. So that was one way of them replacing that. Although it goes against potentially promoting electric vehicles, but that maybe that tax revenue could then be funded into some of the state provision and the public charging networks and that sort of thing. Now, it says as product range, so this should give you an idea of different products they are selling. So we've got Model S, Model 3, Model X and Model Y. You can see they vary slightly in terms of what market they're targeting. So sort of long range high performance sedans on the S, but a more large premium electric SUV from Model X. So it's showing you different products that they're putting into the market, and if they're considering which one of these they're going to continue. But they've obviously broadened their range over time to try and increase their sales in electric vehicles and diversifying the product offering that they give. And we've got these two other products. The Cybertruck that launched in 2023. The sales for that in America weren't probably as strong as they were hoping. I think it was potentially the features that eventually got put onto the truck were not maybe as high a spec as it was said. The price was very high, so the sales in America weren't as great as they thought. But this is obviously a new type of product they're launching. And as we'll see later, one of the things they're looking into is this sort of autonomous ride-hailing, robo-taxis, this sort of thing. And so that's the Cybercab. I think they said that's not necessarily the name it's going to be. That's the working title of this. But they did got one off the production line. So it was in the news the other day that they did have produced one of these. But obviously it's not at the stage where it's all been approved and regulations are in place and they've got mass market for it. It's basically the design stage and getting the production working as they look to launch that and grow that area of their business in future. Now, these are the gigafactories. So thinking about, they've got the product range. Now, where are they producing these? So you can see over time, from 2016 onwards, they've expanded these different gigafactories in America, in China, in Germany, and there are going to be more countries in future as well. And you can see the different things they're doing there in terms of where they're producing different models or batteries, Cybertruck, and that sort of thing. So that gives you a sense of where that production is across the world. I've also sort of noted here about there was quite a lot of protest in Germany about the gigafactory, its water use, its expansion, ecological impact, and that sort of thing. And that sort of links back to that slide we had on the external costs, really, in terms of production. So that's been in the news in recent years about the unease a little bit when it was announced, when it was opened, what was going to happen with this. But these gigafactories, one way in which they've expanded their production capacity massively. So you can see the increase over time. The Shanghai one produced their 4 millionth vehicle in December 2025, so that made the news in terms of that. And you can see from what Tesla's saying there, in December 2025, they've gone from 3 million vehicles to 4 million vehicles in just over 14 months. So that Shanghai gigafactory really pushing their capacity. And annually they can produce probably a couple of million at an estimate, but that sort of level. Obviously the one in Shanghai has been going for a few years, and therefore that 4 million is not in 1 year, that's across time. This gets you to think about a little bit about business growth and how you can link this to the economies of scale that Tesla's trying to get through their organic growth. And you can utilize that diagram on the right here to sort of show this, potentially as more and more gigafactories are produced, Q1, Q2, Q3, seeing the average costs falling due to economies of scale, potentially that sort of technical economies of scale from spreading the cost of all those machines over more units, purchasing economies, better financial economies, and that sort of thing. But potentially, could there be some diseconomies of scale here in terms of those factories across the world? So not just in the US now, are there more communication, coordination issues? You try and maintain that brand, but through production that's on multiple sites across multiple countries. And then the workforce itself. I've just thought it would be quite interesting to see some comparison of some wages in terms of what they get. As you'd imagine, the wages are lower in China there, but it gives you that range of roles that you could have here. So just being a production operator on the factory floor, maintenance, you need a bit more skill from a maintenance technician, and the process engineers themselves, ones who are looking at the process, designing that, innovating about the production, so they're obviously on those higher salaries. As you'd imagine, derived demand here for Tesla employees, as the number of Tesla sales gone up and the number of gigafactories gone up, obviously their workforce has risen quite substantially over time. A bit of a dip in the recent times. We'll have a look about that in a minute, in terms of maybe the drop off in terms of the competition they're facing potentially in a minute. I mean, in terms of automation, so some areas of those factories are going to be highly automated, battery production for one, but there's still workers there on the final assembly line. And whether AI and automation will take some of those jobs or more jobs, that potentially could be the case. But maybe there'll be more jobs created. There could also be jobs created. And that's one of the things that AI we don't really know at the minute, but it's something that they are thinking about in terms of how could they get more AI and automation into their gigafactories, and maybe some high-skilled jobs be created on top of that in terms of programming those robotics. But it could affect those at the lower end of the workforce. So that was gigafactory and the workers. Vertical integration is another key part of Tesla. So sort of trying to control the supply chain of producing electric vehicles. So in-house design, manufacturing, software, trying to get it all produced themselves. This is them trying to get control of the supply chain, make it more efficient, but also that culture of innovation, because they're going across all these different parts of the design elements and trying to sort of think about how they fit together, innovating, try and make it as efficient as possible. So that's an interesting thing. It's a good example really of vertical integration, if you want to use that in the exam. And you can see here are some of the sort of companies they've taken over in recent times. So we've got Solar City, or solar generation. We've got Groman Engineering, so there's advanced automation expertise, so trying to get their manufacturing improved. And they've also got Maxwell, one of the companies that do battery technology they've invested in. So they're trying to, it's not just organic growth here, it's external growth using vertical integration to try and acquire some of these skills that they can sort of work across all the different elements of producing and selling and distributing electric vehicles. And yeah, so we saw that obviously global expansion in terms of gigafactories. You can see it here now, right? It's quite a nice map just showing you where in the world they're particularly clustered. You can see this sort of shows the sort of charging facilities. You've got motor stores, services, delivery centres. Okay, it's all on top of each other there, but it does show you that idea of North America, Europe, key markets in Asia, Australia as well, and therefore it's showing where they're not as well, sort of showing it's not in Latin America at the minute, really in Africa, in Russia. So it's sort of giving you a sense of where that expansion has taken Tesla. A lot of their figures you get if you go to Tesla, like they've broken down their sales in terms of US, China, and other. So you can see this. I've sort of produced a chart here based on their figures of their revenue by region, and so you can see the vast majority is still the US and a big chunk from China. But remember, others will cover other parts of the world in terms of Europe and Australia and other parts of Asia as well. But they're really keen to sort of show what their market is in the US and in China. So in the US market, they are still around half of the market, so 50% market share roughly in terms of electric vehicles. Other markets, the UK, it's nearer 10 to 15, slightly higher, maybe sort of touching 16, 17 in some European markets. But in China, the market share is around 8 to 10%. I'll talk about BYD in a second, but they've got more to 30 to 35%. These are rough figures here to give you some idea. It's hard to find exact figures on those, but it gives you a sense of where they are dominant, where their monopoly power is more concentrated. But China is the market. I mean, China is the market they're trying to get into, as we'll see, but there's some strong competition there. So in terms of what they do with their prices, so the absolute US and Chinese market again, I mean, this is a classic example of price discrimination by geographic location, by income. And so there is a much higher price for the Tesla. This is one example, the Tesla Model Y. Shows how much it costs in the US, and much higher than the $34,500 equivalent in China. So that's one explanation of what's going on here in terms of selling that same product, different prices in different markets to try and maximize their profits. I mean, demand is going to be more elastic in the Chinese market, as it's going to be a high percentage of their income to purchase electric vehicles. There's also more competition in the market, as you saw with the lower market share. So the elasticity will be different in the Chinese and the US market, and they're trying to maximize profits as a result. Now, these are some figures coming up with revenue and profit at Tesla. I'm just trying to show you that sort of exponential growth, that expansion they've had in recent years in terms of as they scale up production, expanding new markets, a big sort of exponential rise in revenue. The chart on the right is similar, it's just broken down by quarter of a year, but this also breaks it down to show you, that's probably no surprise, that the automotive revenues are much higher, but they are gaining revenue also from electricity generation and storage and other services like leasing their vehicles and other things like that. So you're seeing that is a big pattern that's going on with Tesla at the minute, that exponential growth of their sales. That's up to 2003, 2004. But what about their profit? So this is a nice chart. This is from Statistica, showing the fact they were in loss up until 2020 onwards. It starts to be more profitable, and that's because they're investing so much in their factories, their technology, setting up production. So that was raising their costs, but they couldn't really get the revenues, even though going up quite high. They weren't necessarily getting enough revenue to cover that. They're just reinvesting a lot of that into expansion and improving, growing their business. But then it has done that as that real peak of the revenue has gone up. We're seeing that as higher volumes, the economy of scale, lower unit costs, stronger profit margins, and all those things that are pointing that it's outweighing those sort of costs of the early expansion, or covering those early costs of expansion. So Tesla has become profitable, and that's a good thing to think about in terms of the context of where you're at. You're putting Tesla into any sort of longer essays, that switch from loss making to profit making. However, we can see here on the chart that their profits have dropped in 2024 and 2025. So they're not making losses like they were in the 2000s, but certainly a big drop there. And it sort of made the news here, like there's this 37% drop in their profits from 2024 to 2025. So bit of an issue here. So revenue still hitting record highs. So in 2025, we saw it was up 12% in the year, so still strong. Issue is more on the sort of cost side. So the tariffs that Trump's put in adding to costs and sort of importing those raw materials into their factories. Also, they've been spending quite a lot of money. So they were investing quite a lot into the gigafactories, which they still are, but like now moving into sort of the AI sort of world, put a lot more R&D into that, because as we'll see, that's an area they're looking to move into. Also, some of the issues with price cuts. Obviously, we're going to see this sort of competition with BYD and with other firms in America. Rising competition could lower their prices a little bit to compete. And also, as the US tax credit expires, they're trying to do something to keep sales up. So this tax credit made it cheaper for people to buy electric vehicles in America, but that's expiring, so price is down. So what this is showing you is that maybe those profit margins that had improved maybe in 21, 22, 23, now hit by some external factors, some reinvestment, but again, competition as well, really hitting them. So those profits falling at that juncture. And yes, the competition. So I just put some examples here of some different vehicles. These are sort of ones. These are not BYD. These are sort of traditional car manufacturers that have switched into electric vehicles. So Volkswagen, Hyundai, Chevrolet. So just showing you a few examples there. I mean, there's many more. Obviously, there's many more than these three, and that's where one of the competition factors come in. So in terms of like contestability, like can they enter the market? Well, I think firms that are currently car manufacturers probably have that ability to switch potentially their production facilities into or change the design, moving into electric vehicles much more easy than maybe if you're a startup firm from scratch with the startup costs, economies of scale, brand recognition. So this sort of move into EVs potentially showing some contestability of the market and therefore now some competition that Tesla faces. And obviously another part, as we mentioned previously, is BYD. And BYD, the Chinese firm, so they've basically been given a lot of subsidies by the Chinese government, hit some estimates around 3.7 to 5.6 billion from government subsidies. That's going to shift supplies to the right, drive their price down, increase their sales, allow them to compete aggressively on price and to sort of grow globally. Now, this is one thing, like on a more macro side of things, where this is where some of the trade wars and protectionism comes from a little bit, where this is unfair. This is sort of an unfair version of protectionism for those Chinese firms. So there is some downsides there, but basically they're put in place to try and allow, they quote, they win the EV race against Tesla, to try and sort of really compete with them through heavy subsidies. And you can see here, I mean, this made the news again, start this year, that there had been, that BYD had overtaken Tesla to become the world's largest EV brand. And you can see some figures there in terms of 2.25 million from BYD compared to Tesla, which has dropped down. The sales here have leveled off a bit from Tesla, and this is one of the reasons why their profits, as I said, is going down a bit. It's one of the factors that there has been some leveling off their sales. BYD, as I said, lower prices, aggressive global expansion, that's how they're getting more sales. But the sort of subsidy cut, the tax credit going, not as good reception for the new models, the fact that Musk was very much involved in the Trump administration, and the backlash against that. There's a few factors at once here, a sort of perfect storm that saw a drop in Tesla at the same time that BYD is seeing their sales rise. And so that is really showing that fierce competition with BYD due to subsidies, lower prices, but also some issue potentially at Tesla at the same time. So therefore, it's one of the things that Tesla has been doing, is doing some price cuts in China, and that's what's been hurting their margins a little bit. So they're trying to compete with the lower prices. There's been more than these announcements really, but this is something on the Model Y and then the Model 3 and Y prices being lowered in 2024 and 2025. That's hitting their margins. But this is classic game theory, really, isn't it? Sort of firms being undercut, so they'll undercut them, and is that moving towards a Nash equilibrium, which is probably going to get lower profitability potentially. But obviously they're trying to gain a foothold in that market. So it's not necessarily driving at profit at this point. They're potentially sort of moving towards more a revenue maximization strategy where they're trying to defend market share against BYD and other domestic brands, even at lower profit margin, to try and establish that, get some more customer loyalty, get some more market share, and then potentially long run, potentially to put the price up again. So sort of revenue maximization strategy, potentially what they're thinking about doing in the short term, really, against BYD. There's also in the news sort of at the end of last year about Tesla looking at these lower cost models potentially. So cheaper models of its most popular cars in the US, but investors weren't overly impressed by this potentially, but they're trying to get in that US market, can they lower their, not just lower their prices, but if you lower the sort of cost of the models, you reduce certain features of it. It's a different strategy where they can try and get, not the premium end, but try and keep sales going, despite the fact that there's been this reduction in the sort of support by the US government for electric vehicles. So looks like at the moment it hasn't gone hugely well down with investors, but it's one way they're trying to think about, again, changing their product range a little bit, changing the product specification, the pricing of those to try and compete in the market. They've also launched into India in recent times, but this has sort of stumbled a little bit. So despite the fact that some of the rivals like BMW, BYD and Mercedes have done quite well, it hasn't been necessarily as good a sales pickup for Tesla. They're now thinking to themselves a little bit about, they've announced like a lot more charging stations, really about customer experience, building that ecosystem like they've had in other places around the world, like we saw in that sort of global map. So that is something they're thinking of doing. I don't think they're giving up on India. It's early days in India, but it hasn't gone. Certainly there was disappointment with the sales figures. So that's one area they're looking to go in, more global expansion. But as I saw in China, it's difficulties in doing that. It's not a guaranteed success, but I think that's the direction they want to go in terms of their organic growth. Having said all that, this potentially is one area where AI and robotics is something they really are starting to focus on quite a bit. So they're looking to pivot away from some of the traditional electric vehicles, freeing up some factory capacity to create its Optimus humanoid robots. So you can see there, that is it on the right. They're also putting money into AI, into Musk's XAI venture, so $2 billion into that. So going beyond their sort of traditional EV lineup and prioritising robotaxis, that Cybercab we saw before, automation in the gigafactories potentially, but also there's next generation robotics. So, I mean, this is sort of classic Musk, really sort of moving into more and more advanced areas as they pivot away, not totally, but pivoting away from electric vehicles. And there's the man himself. So the other thing that hit the news at the end of last year was the fact that his pay package could be worth up to $1 trillion. It's giving him hundreds of millions of new shares. And you can see, if you look down what's going to make him get that package, here's some targets they've put in. So these are quite nice to put into in any sort of exam essays about what the future of Tesla could be. 20 million vehicles, deploying 1 million robo-taxis. So they're not there at the minute because they're just launching that. 10 million FSD subscriptions, but also lifting Tesla's value to 8.5 trillion. We saw earlier it's about 1.2 trillion, wasn't it, on the market capitalization? So that's a direction of travel that they're sort of going, and if he can succeed in there, then great for them. So that's potentially an issue. I put principal agent problem up here just for the fact that I think this is the shareholders trying to align maybe Musk's sort of instincts as a CEO with the sort of profitability and dividends for the shareholders. So trying to bring him in line. I know he's a shareholder as well, but bring him in line with where the shareholders want the business to go and not just going necessarily in all directions that Musk would like. So trying to tie him down with this sort of pay package that links him in, eventually. It also sort of begs the question about, whether people should be paid $1 trillion, even if you are Musk and you're sort of CEO of Tesla. So that's one of these questions about wage differentials and whether we think that is there or not. So you could contrast this part of the labour market at the top end with other figures we saw in the labour markets in the gigafactories earlier on. So that's our half an hour up. On Tesla, just put some questions here you might want to think about, and think about how you could bring in some of the statistics into this. The whole point of this video is trying to give you a sense of how Tesla is, but also, is it a business you could bring in? A good example of monopoly power, of a growing business, and therefore could you think of where in the video of things you could put in if these are 3 essay titles in the final exam. Okay, we'll leave it there. Thank you for listening.